Stacey, I mean, DoorDash priced way over even the high end of the range. Is this nirvana? Is this as good as it's going to get?
We've seen a lot of investor demand for IPOs this year. It certainly out-surpassed prior years and seems a little bit counterintuitive in the way that markets were so troubled earlier in the year. It's hard to believe how the market has turned around. But this is what investors are rewarding, especially companies that have really changed the way we're living our lives every single day. And so the reception for DoorDash has been astounding, and it's an exciting moment for them and their team and everything they've accomplished so far.
Stacey, part of this feels euphoric, right? I mean, $102 a share, stocks are up. It's prime real estate to go public today. But how long does the euphoria really last for?
You know, it's hard to predict how investor demand is going to continue to years to come, but there are a lot of companies that have stayed on the sidelines for a long time. So what's important to recognize is now that they're going public, investors are actually getting an opportunity to share in that success. Many companies that have stayed private have raised money in the private equity markets via private equity. What we saw in the spring is so many companies were able to effectively and efficiently, at a much lower cost, tap the public markets when they needed to raise money in the midst of the pandemic. It drove a lot of companies off of the sidelines and into the public markets. That's important because what makes the capital market so strong is that they're a story of shared success. So while companies will go up and down and the markets might go up and down over time, having them publicly available so that people can invest in them is really an important trend, and I'm encouraged to see it.
But to your point here, we still see a lot of companies raising a lot of money in private markets. DoorDash is one of them. Stripe is another one of them. Are companies still waiting too long to go public?
I think the market, the economy, the U.S. and the global markets in general would benefit from companies going public sooner. When they have their vast amount of growth in the private markets, not everybody gets to share in that. There's also a great discipline, transparency, governance that gets introduced in the public markets. So if we can look at what that balance is so that we're encouraging companies to come public sooner, everyone benefits from that. Right now, only the elite really and the wealthy get to invest in the private space. So it's important that we're looking at our structure and making sure that we have the right balance of encouraging companies to go public. 2020 set that tone, and I really think swung the pendulum.
Stacey, this is a straight-up regular listing, DoorDash. Are you surprised there haven't been more direct listings? We were talking a lot about that earlier in the year, and you certainly were as well.
Yeah, absolutely. I think when you look at what we saw, we had one day in September where we had 2 direct listings, 2 IPOs, and 2 SPACs going public the same exact day. I think what we're going to see is that in the future, as companies are choosing the path to public that's right for them. DoorDash used a more innovative auction style to price the offering the night before. What we're seeing is more innovation in the capital markets than we've seen in the past 2 decades. So it's right now the power is companies are getting to choose the way they go public, partially because they've stayed private so long, they're much bigger. Their goals for going public are less about capital raising and more about the other benefits that the public markets provide, like liquidity and currency and that visibility and scalability. So we're seeing them question how they go public because of that, which is why they're really innovating. And it's exciting to see how many different elements are now going to be incorporated across those mechanisms. I think you're going to start to see things that direct listings introduced work their ways into IPOs and vice versa.
So give me your pipeline, Stacey, for 2021. I mean, can we really beat this year? Like, how much of it's kind of just beating out a Biden administration before they take over and maybe change some stuff? Like what kind of sectors, what kind of volume are you going to be looking at?
Across the board, we're still seeing incredibly high demand across sectors and across industries. What we saw in August was a record-breaking August, and then September broke records, and then October broke records, and we still have a really strong pipeline for 2021. So there isn't yet a slowdown per se. We have a lot of companies lined up to go public, and there's a lot of demand, across different industries. Not all companies have been impacted the same way this year. We certainly saw that 2020 has impacted different industries in different ways. So technology has certainly been strong, and we continue to have a number of technology companies lined up, but it's not limited there. There really are a variety of sectors that are in queue for 2021, so it's really looking strong.
Stacey, one of the other big drivers this year has been SPACs. You were championing the democratic kind of nature of going public just a moment ago. Do you think SPACs really fit that bill? Hedge funds that fund them in the kind of first phase don't take much risk. The risk is in the second phase, and I'm just wondering whether or not that needs reviewing.
Yeah, I think what we're seeing is that each one of the ways to go public has its own benefits. With a SPAC, you're negotiating with a counterparty. You have a little bit more control over what that looks like. And importantly, you can provide forward-looking guidance, which is something that companies are looking to do, especially companies that have businesses that are really future-focused. Like a lot of the electric vehicle companies we're seeing choose SPACs because it's important to them to be able to provide forward-looking guidance. That's one of the elements that I think we're going to see in IPOs potentially change. You could start to introduce more visibility and disclosures into the IPO process. So it does provide access. SPACs help get companies public sooner in many cases, which I do think is a democratization if they're getting them public earlier in their life cycle. And investors can choose whether or not they want to support the SPAC at the time of the business combination. So we are seeing a variety. They're not all created equal. There's certainly a large number of SPACs out there, and I don't mean to imply that they're all going to have great business combinations. The market will determine that. It's important to see, but companies are choosing these. They're evaluating their options now. And DoorDash is the largest IPO of the year, and they looked at their options. They chose a traditional IPO. I think that's what companies are going to do, is they're going to choose what's right for them.
Stacey, speaking of SPACs, most SPACs don't have many women involved in them. And we're starting to see Wall Street start to change the rules, right? Over at NASDAQ, starting to put rules around diversity among boards. How are you thinking of this issue? Would you match that decision?
Diversity is such an important issue. In SPACs in particular, I would say, they're not really operating a company yet. It's typically a couple of board members and a couple of employees. So it's the time of the business combination that diversity really becomes more important. But diversity is critical. Businesses, the data is very, very clear that businesses perform better when there's more diversity on their boards. What's important to recognize is that our markets are designed to balance investor choice with investor protections. But we need to maximize that investor choice. When we use exchange listing standards to require things like diversity profiles or others, we're defining the investable universe. So instead, at the NYSE, we're using our power, our strength, our brand, our community, our network to drive meaningful change on issues that we're extraordinarily passionate about, like diversity. So we launched the NYSE Board Advisory Council that taps into the network of NYSE CEOs to actually source diverse board candidates for other companies that are looking to diversify their boards. And we've seen a lot of progress.
Are you saying that in some way that quotas is necessarily not the right way to go?
I don't believe that we should be using quotas to define those requirements, because again, it goes back to the same topic we talked about earlier. We're limiting investor access and we're limiting investor choice if we don't let investors choose their dollars to the companies they want to support. Investors will demand diversity. They are demanding diversity. When we look at the Russell 1000, the NYSE listed companies that are there, 99% of them have a woman on their board. 91% have 2 or more women on their board. That's very different than it was before because the investors are demanding diversity. Now, the data isn't as clear on ethnic diversity and ethnic background because it's not often disclosed. So we're collecting data on Intercontinental Exchange across ICE Data Services on the metrics that companies have, what data they have on their board diversity board profile, so that investors can make those decisions and demand the changes that they want to see. But the market should determine that, not the exchange, not the exchange determining it.
So I'm just going to glean from you then that the NASDAQ's proposal to push the SEC to approve their diversity requirements, that each board have one woman or someone who identifies an LGBTQ, is dead in the water for you? Like, you're super against it?
It's not something that we're considering to adopt here at the NYSE, because we believe that there are more meaningful ways that we can actually drive change by using our network and our resources, and that's the path we've chosen. It's a lot of work, but we're doing it. And with 99% of NYSE listed companies having a woman, I mean, just look at the change we've seen over the past few years. When Fearless Girl arrived 2 years ago tomorrow outside the New York Stock Exchange after having arrived a year earlier in Lower Manhattan, since then, State Street announced that 681 companies had added a woman to their board. So we need to use the power of our voices and the power of our networks and our resources to drive really meaningful change. We just don't think we should be using our listing standards, because that enforces our views on investors and preventing them from being able to make the choices that they want to make and that they are making.
Stacey, let's change subjects. Let's talk about Chinese companies listed on U.S. stock exchanges. Do you think the Biden administration is going to continue the vein taken by the Trump administration, forcing many of these companies to potentially delist? And if they do delist, what impact are we going to see on volumes?
I mean, we've seen legislation passed recently on this subject, so I think that that's going to continue to progress. Importantly, in that legislation, it's about providing those investor protections and making sure that appropriate oversight exists for all companies and that there isn't a subset of the market that's excluded. So we do think that those investor protections are really, really important and critical to the U.S. markets and really what makes us stand apart from other global markets. But there is an opportunity to introduce those protections. So I think that's what we'll see happen, as there will be some, a solution that's designed so that we could, or I hope that's what we'll see happen, that we can make sure that all companies have those protections in place during the implementation period of the legislation. I don't think the administration change will change that much.
But nevertheless, what would it do, Stacey, on volume?
If you look about the market overall, it's not that meaningful. I think what's important, though, is, again, choice and investor access. If we start to encourage companies to list in other global markets, we might lose those opportunities for U.S. investors. And U.S. investors want the fastest growing opportunities. So I would encourage all those involved to find a solution so that U.S. investors' opportunities still exist and that they're not forced into other markets overseas. We want to make sure that they're able to invest in the companies that are growing really quickly. And that's what they're seeing. The demand for Chinese companies in the U.S. continues to be really high in spite of the pending legislation. So we want to make sure that we solve those problems so that U.S. investors still get that. I think that's the bigger issue.
Stacey, we have the S&P now trading at lows of the session, and McConnell saying Schumer and Pelosi are brushing off aid proposals. At what point does this lack of stimulus to the broader economy start to really impact Wall Street?
I think what we've seen is the market has done really well over the past year, and that's not reflective of the broader economy and everyday people, right? I mean, there's certainly so many industries that have been negatively impacted. A lot of the indices that we look and we track are really reflective of some of the largest companies that have an outsized impact on that index performance. So not only is it not reflective of the entire economy, it's not even reflective of the entire U.S. stock exchange economy, right? There are a lot of companies that have had challenging years. And importantly, down at the individual level, when you start to think about small businesses that are impacted, I mean, we really do need to encourage a stimulus package to help those most impacted by the challenges of this year. I mean, one of the reasons why DoorDash was so well received is because they are part of that solution for so many small businesses to be able to go out and continue to earn a living during the conditions that we've seen this year that have been so challenging. So the stimulus package is really critical. We need to come up with something and get it through quickly because many people are suffering, despite what the markets might look like.
Absolutely, and that divergence between Main Street and Wall Street looks really wide right now, Stacey. Do you think history will remember much of what has been done by government and the Fed as a rescue for the financial sector rather than the real economy? It increasingly looks like that, judging by the pricing we're seeing on markets.
Well, I think that the actions that we saw taken in the spring were focused on the real economy, right? They were focused on putting money into people's pockets that were outside of Wall Street. And the system is very intertwined, right? So we need to help the overall system, but we need to be focused on the individuals. I do believe that a lot of the events of this year are going to exacerbate a wealth divide. So things like getting companies public is one way to provide opportunities for investors to share in that success, but it's not all of it. We need to really focus on our small businesses, our local restaurants, our communities. Those that haven't been as negatively impacted would do a service to the economy overall if we thought about how we could help. So, I'm buying gift cards and at restaurants and things to try and just continue to put stimulus back into those businesses, but our government needs to take those actions.